Hello everyone, welcome to another episode on financial results brought to you by Proinvestor AI, your go-to platform for insightful, data-driven stock market updates. In this episode, we dive into the Q2FY25 financial results of Kaynes Technology, a leading electronics manufacturing services provider. We'll discuss their recent performance, growth across different segments, financial highlights, and future outlook based on the latest earnings call. Let's get started. Financial highlights. Kaynes Technology has delivered a strong quarter, reflecting significant growth in key segments and financial metrics. Starting with their revenue performance, Kaynes recorded an impressive 59% year-on-year revenue increase, totaling 5.7 billion Indian rupees. This growth spanned multiple segments, with industrial leading the way with a 125% increase, followed by consumer IoT at 74%, automotive at 28%, and medical at 35%. This broad-based growth highlights Kaynes' strength across diverse areas and their strategic push in high-demand sectors. Moving on to profitability, Kaynes also reported a solid expansion in margins. The EBITDA margin rose by 80 basis points year-over-year, landing at 14.4%, which led to a substantial 68% increase in EBITDA, reach INR 8 to 1 million. This improvement was driven by the rising contribution from higher margin segments, particularly the industrial and IoT categories. As a result, profit after tax saw a remarkable 86% year-on-year increase, standing at 602 million Indian rupees for the quarter. One notable financial driver this quarter was an increase in other income, significantly boosted by proceeds from a recent qualified institutional placement, or QIP, which added to the profitability. Additionally, management has guided that with a healthy order book of 54.2 billion Indian rupees, they're optimistic about maintaining their growth momentum, targeting to cross 30 billion Indian rupees in revenue for FY25. Segmental performance and order book insights. Kaynes' segmental performance was equally impressive, with the industrial sector showing stellar growth at 125% year-on-year, making it one of the most lucrative areas for the company. The automotive segment also performed well, growing by 28% year-on-year. Together, these two segments contribute to over 80% of Kaynes' revenue, providing a stable revenue base with significant potential for further growth. Meanwhile, revenue from box build services, a high-margin area, increased by 81% and now contributes 51% of the total revenue. This shift towards high-value-added services is a positive sign for investors as it can lead to sustained margin improvement over the long term. On the order book front, the company has continued to see strong demand across its primary markets. Management mentioned that recent contract wins in aerospace, defense, and strategic electronics are expected to provide high-margin growth going forward. Additionally, Kaynes plans to further penetrate sectors such as medical, outer space, and industrial electronics. Their robust order book, which grew by 57% year-on-year, reflects the high demand for their services and underlines the company's promising outlook. Business outlook and strategic initiatives. Looking ahead, Kaynes Technology has ambitious plans in place to expand its production capacity and broaden its offerings. During the earnings call, management shared updates on two key facilities, their OSAT, outsourced semiconductor assembly and test, and high-density interconnect PCB projects. Both are expected to start contributing to revenue by the end of Q4 FY26, supporting the company's growth trajectory. In the rapidly growing electric vehicle and smart meter markets, Kaynes is also positioning itself as a strong player. Management indicated their goal to secure a 15 to 20% market share in India's emerging smart meter market, which has been projected to grow substantially over the next few years. Kaynes is actively involved in the EV space, servicing both domestic and international clients and supplying EV infrastructure solutions. With regard to capital management, Kaynes aims to fund its expansion plans largely through internal cash flows. The company is targeting operating cash flows between 1.7 billion Indian rupees to 2 billion for FY25, which they believe will support their expansion initiatives without diluting equity or increasing debt substantially. Lastly, the management highlighted the substantial opportunity for import substitution in India's electronics manufacturing sector. Currently, around $25 billion worth of electronics are imported annually, and Kaynes is focused on capturing this local demand with their expanding product offerings. Conclusion and closing remarks. Kaynes Technology has demonstrated remarkable growth in Q2FY25 with promising momentum across its business segments. With an expanding order book, continued investments in new facilities, and a clear strategy in high-growth markets like EVs and smart meters, Kaynes appears well-positioned for the future. Thank you for tuning in to today's episode. Don't forget, for comprehensive stock market insights and updates, Proinvestor AI is here to help you make informed investment decisions. And if you are interested in the full earnings call for Kaynes Technology, be sure to check out Proinvestor's YouTube channel, where you can listen to the entire call and get detailed insights directly from the management. Until next time, happy investing.